Hello all, welcome to the very first trade review of this channel. My name is Ashish. I've been an equity and a forex trader for the past 5 years. This channel is basically to journal my journey towards consistency in trading. So, getting to the topic, what did happen last week? Last week was a total disaster. Took 5 trades, all 5 trades went to the stop loss or break even. Why did that happen? There is a very legitimate reason why that happened, in fact. And it's a very common mistake we all of us make, and we all of us are guilty of doing that at least at some point in our trading. And I'm guilty for repeating that again right now. So, what did happen? I could just say it right now, what was the mistake, but it's not going to stick with you because this mistake has happened to me after a while. And why did that happen? I'm going to break that down completely within the analysis. And I would like you to stick through that so that you can save hundreds and thousands of dollars by not making the similar mistake I made. So stick through the video and understand why this happened, and understand for yourself why it shouldn't happen for you, and do any kind of preventive measures to avoid this. Okay, so just for information, I have taken up a new $60,000 account from 5%. It's a two-phase account, and beyond the rules of the prop firm, I have imparted certain more rules within myself, and the rules are as follows. I will only be taking 0.75% as risk per trade, and if it's an A plus setup, I will be taking 1% as risk. The second rule is that if I lose 3% for a week, I will be shutting down trading for the week. And the third rule is that if I lose 3 trades in a row in a day, I will be shutting down trading for the week. And I will be breaching rule number 2 and 3 for only when I see an A plus setup. And A plus setup doesn't happen often for me. It only comes twice or thrice, maybe 4 times a month, or maybe even less. So when that setup comes across, I will be taking that, regardless if I've lost 3 trades or if I've lost 3%. Despite of all these, I'll be taking those trades. So now let's head to the analysis and see what went wrong, and let also know what are the things that went right, so that I am afloat even for this week to actually tackle all those losses and come back stronger. So let's head to the video. The initial account size is $60,000. The risk per trade, which I've kept, is 0.75%, which is around $450. And the current balance is 58,091, which is approximately minus 3%. So let's get to the trades right now. The first one was Euro USD in 15 minutes. If you can see, it took out this initial liquidity. The logic was that once the liquidity is taken out, it has created a market structure shift right here, and it has given an upswing, and again it has showed a continuation of the trend. So the assumption was that this particular liquidity is going to be taken out. If you look at the logic, the overall trend was bullish though. It had a weekly bearish closing, which gave me the bias that okay, I can focus on bearish setups during the start of the week. And the previous week liquidity was taken out, which is this one, and continuation of the trend assumed to the next liquidity as explained to this one. The error I did was there is a liquidity right here, which I didn't really give much importance into, because a fair value gap was created here, which is where my order was placed. And the problem is that whenever there is a liquidity very close to a fair value gap, there is good chances that the fair value gap gets invalidated and moves towards the liquidity, and the possibilities of reversing from this particular liquidity is higher. In this case, it didn't reverse, it kept going up since the overall trend was bullish. That was another error which I made, that I worked against the trend. There was actually no trade setups here. The trade setup was this one, which I did take, but in a different account. So for the sake of this account, I'm not bringing that up. For this account, it was a stop loss. The next one is gold. Gold was the one which screwed me this week, because I took 3 trades in gold having the same exact bias. The first one was in the 4-hour time frame. In 4 hours, the weekly was a bearish closing with a huge rejection right here. This is 4 hours, but in weekly you can see a huge rejection there, and there was a good displacement towards the downside while creating this fair value gap. So my bias was that since it has shown a market structure shift right here, it is going to take some level of accumulation right here and manipulate to this liquidity and then distribute, which clearly didn't work out because gold kept going up. It was valid for a period of time, but after this closing, it wasn't valid. So once this was closed to the upside, I closed somewhere in the middle, which kind of saved me some points from stop loss. But if you look at the overall trend, was still bullish in gold. The weekly bearish was closing. Market structure shift with displacement was created, which is this particular fair value gap. Bearish buyers taken on looking at the nearest available liquidity, which is this one. This liquidity was pretty closer, assuming that it will be taken out and then moving towards the next one. But clearly it didn't work out because overall trend was bullish and I went against that. Same goes for the next one. Next one is in a lower time frame. This is the 4-hour fair value gap, which I've marked in the previous trade. So the price came into this fair value gap, created a market structure shift, which gave me some additional bias that, okay, it might go down. So I shorted here, seeing this particular fair value gap, but it was taken out. This was during the Tokyo session. So even the strength of volume was pretty low, and even that could have been a factor for this trade to fail. But overall, this was a fail. The logic is pretty much similar. Price entered higher time frame fair value gap, which is this 4-hour fair value gap, created a market structure shift at 15 minutes. Price created a fair value gap at 15 minutes. This is the market structure shift at 15, and this is the fair value gap at 15. And my trade was right here, targeting stop loss, or somewhere here, right below this wick, and then targeting these lows. Clearly failed. The next one is the trade which I took before this. It's same in gold. Similar setup. Came into the fair value gap, created a market structure shift, gave a fair value gap right here in lower time frame. My short was right here. It did try to resist a little bit, but since the overall trend was always bullish, all of these trades kept taking stop losses. So the same error went against the overall trend. So 3 trades back to back took stop losses following just one logic. And the only error that happened in all these 3 trades were staying in the wrong side of the trend. I wasn't bullish. I was bearish when the overall market was bullish. US 100. US 100, the overall trend was bullish. And the logic is all these liquidities were taken out in lower time frames, and it created a market structure shift, which is took out the liquidities, created this market structure shift. So my assumption was it's going to come down to this fair value gap and then move from here. But this was a news impact. There is no error in this trade. This was basically a news impact which happened sometime in the evening or around 10 p.m. IST. So that affected this trade. But there is no error. This is a solid setup. This is my setup which I usually take. This has a good win rate, but whenever there's a news, like technicals really get invalidated. So it's the same logic. Taken out the liquidities, created a market structure shift, looked for a fib retracement, and the trade is there. Again, stop loss. This is one trade that was a winner, but I was taken out at break even. Again, this was a news manipulation. I usually move my stops to break even when when my trade moves to 1:2. So that is the logic I trade with. If it moves to 1:2 and if it's reversing, the probability of it going towards my stop loss is higher. So I always move it to break even. And this is AUD CAD. AUD CAD overall trend was bearish, and weekly it was bearish, and it came to a good supply zone. And within the supply zone, I went deeper into the time frame into 1 hour, and I saw this displacement happening, and this displacement happened with a fair value gap setup. So I was ready to short in this fair value gap, and that's exactly what I did. It did go well, but the next day there was I think it was CPI which came and took me out at break even and continued the trend. But There is no error in this one too. This is a solid setup. This is my trade management. I usually move to break even. So even if it takes my break even, I don't have any regrets because I followed the plan. And these are the trades for the week. And this is my MT5 terminal, which shows 58091 for the end of the week. For 5 trades hitting stop losses, managing risk at -3%, I feel it's pretty good according to me. And I will be able to recover from this quickly if I get just 2 winners the next week. But I'll be taking it a little slow. I'll be very conservative with my trades. But that is it for the week. If there's one lesson to take out from this, just stick to your risk management. It's going to save you every single time. The game is to stay in the game. It's not to winning the game is a different topic, but according to trading, it's better to stay in the game for the longer period of time. And as you stay in the game for a significant amount of time, you'll get to see a lot of setups play out, and there'll be those 3 setups or 4 setups that happen within a year, which will make you bank. As of now, you should have a great idea that what went wrong. Yes, that's exactly what you're thinking. I went totally against the trend. I went against the trend only for one reason, because there was a bearish weekly closing, and it didn't go in my favor. It has worked out for me before, months back, but it didn't clearly work out for me in the past week, and I won't be replicating that again within my system. My entries were solid. Even my stop losses, all of the execution criteria was on point, except for this one thing, which was the bias, and that has screwed me for this week. But I did my risk management so well that I stayed afloat even after so much damage, and it's not gonna take a lot of effort from my end to completely consolidate this and get to a point of positive. So if you want to take one message out of this video, always stick to the trend. If the trend is bullish on a higher time frame, don't look for bearish setups. You can try to trade the pullbacks, but then it is always going to hold that significant level of risk when you're trying to trade against the markets. At least try to cut your risk down in half if you're going towards that view. I would say if you're a one pair kind of a person, you might be more in tune with that pair, so that you can trade the pullbacks and all of that if you want and if you can. But for the general population, generally speaking, most of you guys will mess up if you try to counter trade. And I am just showing you a clear example on how you will. So don't try to replicate that. If you're a one pair kind of person and the market is going sideways for a while and the trend is bullish, just stay out of the markets or just look for bullish setups within the consolidation. That is going to help you more than trying to switch your view and go against the trend, because the trend is going to resume at some point of time until you get a confirmation for the opposite direction. So always stick to the trend. Trend is always going to be a friend. So if you did stick until this part of the video, I would really appreciate if you can drop a subscribe, share it to whoever you want who will find this useful, and please drop a like. So thank you.